To keep yourself updated, subscribe to IndigoLearn and click the bell icon and download our app OneFin to start learning on the go.
Let's have a look at an illustration. Elia Limited is a manufacturing company which deals into manufacturing of cold drink and beverages. So, there is a manufacturing company. It has various plants across India. Okay. There is machinery A in the Baroda plant which is used for bottling. There is one more machinery which is B which is clubbed with machinery A. So, we have machinery A and there is machinery B which is clubbed with machinery A. Machinery A can individually have an output. So, machinery A can have an output individually and also sold independently in the open market. So, you can also sell machinery A independently in the open market. Machinery B cannot be sold in isolation and without clubbing with machine A, it cannot produce output as well. So, machine B, it cannot be sold independently and machine B cannot produce output without it being attached to machine A. Okay, but machine A can work independently and it can be sold independently as well. The company considers this group of assets as a cash generating unit and an inventory amounting to 2 lakh and goodwill amounting to 1.5 lakhs is included in such CGU. So, these two machines plus inventory of 2 lakhs and goodwill of 1.5 lakhs, all of these put together form a cash generating unit. Now, this is what is the crux of the first paragraph, right? Then, machinery A was purchased on 1st of April of 2013 for rupees 10 lakhs and residual value is estimated to be 50,000. Machinery B was purchased on 1st of April of 2015 for 5 lakhs with no residual value. So, there is no residual value for machinery B. The useful life of both machine A and B is 5 years. The company expects the following cash flows in the 5 years pertaining to machinery A. So, for the next 5 years, cash flow from machinery A is given and the incremental borrowing rate is given as 10%. So, you have year 1 to 5, 1,50,000 and end of year 5 you get 1 lakh excluding residual value. So, residual value is not included, right. On 31st March of 18, the professional valuers have estimated that the current market value of machinery A is 7 lakhs. So, for only A, the current market value is 7 lakhs on 31st of March of 2018. When did we purchase? 1st of April of 2013. So, after 5 years, the current market value is estimated to be 7 lakhs. Valuation fee is 1 lakh. So, whatever they have charged for valuation is 1 lakh. There is a need to dismantle the machine before delivering it to the buyer. That dismantling cost is 1.5 lakh. Specialized packaging cost of 25,000 and legal fees would be 75,000. So, to sell this machine, you have to dismantle it 1.5 lakh. Specialized packing cost 25,000 and another legal fees of 75,000 would be incurred. The inventory has been valued in accordance with Ind AS 2. The recoverable value of the CGU is 10 lakhs. Now, so far we are given the information about the machinery A. Now, we are talking about CGU. So, CGU recoverable amount is computed to be 10 lakhs. In the next year, the company has done the assessment of recoverability of the CGU. The recoverable value of CGU is 10 lakhs as on 31st of March of 18. In the next year, the company has done the assessment of recoverability of the CGU and found that the value of the CGU is 11 lakhs, that is on 31st of March of 2019. So, on 31st of March of 18, the recoverable amount of CGU was 10 lakhs and in the next year, the recoverable amount is estimated to be 11 lakhs. Okay. The recoverable value of machine A is 4,50,000 and combined of machine A and B is 7,60,000 on 31st of March of 19. So, we have multiple dates and multiple information. Don't get strained by so much of information given. Once we start putting these relevant information onto the workings, it will be very easy for us to solve. Required. You are required to compute the impairment loss on CGU and carrying value of each asset after charging impairment loss for the year ending 31st March of 18 by providing all working notes. Okay, we will do that. Then compute the prospective depreciation for 18-19. Okay. Then compute the carrying value of CGU as on 31st of March of 2019. Right. This is the information that is given. Now, what we need to understand here, we have two machines. So, to summarize this question, we have two machines. Machine A, machine B. Machine A can be independently used and sold. Machine B cannot be independently used and sold, right? So, that is one aspect. Then, machine A was purchased on 1st of April of 13. Machine B was purchased on 1st of April of 15. And we are doing this impairment testing on 31st of March of 18. So, we will need to calculate what is the depreciation for 5 years in case of machine A and for 3 years in case of machine B and arrive at their respective carrying amount. Now, using this carrying amount and other amounts given in the question, we will need to calculate what is the carrying amount of CGU and what is the recoverable amount of CGU as per the question. And also for machine A, we have been given independent information. Based on that information, we need to calculate what is the recoverable amount of machine A. Then you have to see whether it has to be impaired. We have to see whether the CGU has to be impaired. And if CGU has to be impaired, how much will be written off from goodwill, and then what, if at all anything is left, we have to write it off against other assets. And we also need to calculate the carrying amount as on 31st of March of 19. So, we will go step by step and we will solve this problem. Now, while approaching this question, one thing that you need to keep in mind is we have a machine which itself is generating independent cash flows, and we have a CGU for which we have to do the impairment testing. Now, whenever we have to test a CGU as well as an individual asset inside that CGU, first you have to test for impairment for the specific asset. So, first we will test impairment for machine A, and then include the revised carrying amount for testing the impairment for the CGU, right? So, first you have to start from the lowest unit possible. Now, in this case, because machine A can generate independent cash flows, it can be sold off independently, we can determine the value in use, we can determine the recoverable amount. We will first test for impairment for machine A, then we will include machine A with machine B inventory and goodwill and test for impairment of CGU. That is one thing you need to keep in mind. So, what we will do is, we will calculate the carrying amount of machine A and machine B as on 31st of March of 18. Okay. So, if you look at the question, machine A was purchased for 10 lakhs and B was purchased for 5 lakhs. So, we can write cost or historical cost 10 lakhs and 5 lakhs. Okay. 10 lakhs and 5 lakhs. Then, the residual value of machine A is 50,000, machine B is nil. So, residual value 50,000 and 0. Okay. So, what is the depreciable amount? Depreciable amount is 10 lakhs minus 50,000. 10 lakhs minus 50,000, 9 lakh 50,000 and 5 lakhs. Useful life in both the cases is 10 years. So, useful life years is 10 each. Okay. So, how much is depreciation for per year? Depreciation per year will be 950 divided by 10, 95,000, and 5 lakhs divided by 10, 50,000. Now, how many years have elapsed after we have purchased the machine? Machine A, please remember, was purchased in 2013 and machine B was purchased in 2015. So, for machine A from 13 till 18, so year ending 14, 15, 16, 17, 18, 5 years have elapsed, and for machine B 3 years have elapsed. So, 5 years for this and 3 years for this. So, accumulated depreciation. How much will be the accumulated depreciation? Simple, 95,000 multiplied by 5, 475, and 50,000 multiplied by 3, 150. What is the carrying amount? Carrying amount as on 31st of March of 18. That is the date we are testing, right? Will be cost, don't reduce it from depreciable amount, cost minus accumulated depreciation, 525 for this and 350 for this, right. Now, this is the carrying amount for machine A and machine B which we have computed. Machine B will be useful when we do the testing for CGU. Machine A will be useful first to test the impairment for machine A, then when we include it as a part of the overall CGU, right. Now, for machine A, we also need to calculate the recoverable amount. Computation of recoverable amount for machine A. Now, for machine A, we have to calculate value in use, and then later on we have to calculate fair value less cost of disposal. Now, they have given us cash flows. They have given us cash flows for 5 years, and the 5th year cash flow is excluding the residual value. So, we will need to include the residual value as well. Then, the discounting rate is 10% because they have mentioned that incremental borrowing cost is 10% and no other information is available. We can assume that 10% is the discounting rate. Okay. So, can have years cash flow, present value factor at 10%, present value of cash flows, right. So, years are 1, 2, 3, 4, 5 and the last one for residual value. Okay. The cash flows are given to be 150, 1, 1 and 51, 1 lakh 50,000, 1, then 1 lakh, then 150 and in year 5 1 lakh cash flow and 50,000 of residual value. Okay. Now, what is the present value factor at 10? 1 divided by 1.1, 0.909, I think you would have learned by heart by now. So, present value for 10% for the first year, 1 divided by 1.1. So, 1 divided by 1.1, I'll take up to 4 digits, 0.9091, or you can take 3 digits also, 0.909, up to you. Okay. Then for the second period, it will be this number divided by 1.1. So basically in calculator you will do 1 divided by 1.1 and you can keep on pressing equal to. We press equal to one more time, you get 0.8265, then 0.7514, then 0.6831, then 0.6210, and for the last also it will be 0.6210. So what is the present value of cash flow? 150 multiplied by 0.9091 equal to 1,36,365. Okay, this is the present value of cash flow. Now, to speed up calculations in the exams or while you are working, you can multiply cash flow with the present value factor and press M plus. Okay, but please ensure before you start using M plus, you have cleared the memory. You can press MRC twice, which is recalling the memory and clearing the memory on the calculator. So 1,50,000 multiplied by 0.9091 M plus, then 1 lakh multiplied by 0.8265 M plus, then 1 lakh multiplied by 0.7514 M plus, 150 multiplied by 0.6831 M plus, 1 lakh multiplied by 0.6210 M plus, and 50,000 multiplied by 0.6210 M plus. Now, if you do all of this, you again need not sum up everything. So, you sum up all of this or you press memory recall MR on your calculator, you get 4,89,770. Now, what is this? This is value in use. So, value in use for machine A is 4,89,770, right? So, this is another thing which we had to compute, we have computed. Now, the second thing we need to compute is fair value less cost of disposal, right? Now, if you see here, the estimated selling price, now if you see on 31st of March of 18, the current market value is given to be 7 lakhs. The current market value is given to be 7 lakhs, and then there are certain expenses. Now, valuation fee of 1 lakh is there, and then there is a need to dismantle and you have to package and then legal fees to sell. Now, tell me one thing, this valuation fee of 1 lakh, should we reduce it from the fair value and consider it as cost of disposal? Now, think of it very carefully. Valuation fee we have already incurred. Why did we incur that? To arrive at the value of the machine. It is already a liability which has been incurred. That will not change whether you sell the machine or not sell the machine. You have already incurred that cost, liability is already recognized, and you will not consider that as a cost of disposal. Please keep that in mind. This valuation fee I have already paid to the valuer to arrive at the current market value. Now, the cost of disposal will include all those costs which I will be incurring when I sell that particular machine, right? So, all the incremental cost will form part of cost of disposal, but this valuation fee which is already paid, which is a past cost, which is already a liability recognized and may be settled, that will not form part of cost of disposal, right? So, to arrive at fair value less cost of disposal, we have to see what is the estimated fair value, the current market value, that is given to be 7 lakhs. The estimated fair value is given to be 7 lakhs, that is the first thing. Then less cost of disposal. What are the cost of disposal? First cost that you have, valuation fee is not a cost of disposal, we have already discussed that. Dismantling cost. Dismantling cost of 1,50,000. Okay, then we have packaging cost of 25,000 and legal fees. Assuming this legal fees would be incurred at the time of disposal of the machine, legal fees would be 75,000. So, only incremental cost should be considered. Okay. So, what is the total cost of disposal? Total cost of disposal comes to 1,50,000 plus 25 plus 75, that is 2,50,000. 2,50,000, right? So, what is the fair value less cost of disposal? Fair value less cost of disposal is 7 lakhs minus 2,50,000, which is 4,50,000. This is the other thing, right? Now, what is the recoverable amount? Recoverable amount is higher of fair value less cost of disposal and value in use, right? So, higher of the two, 4,89,770 and 4,50,000. Higher is 4,89,000. So this is the recoverable amount. Okay. The recoverable amount for the machine is 4,89,770. Right. 489,770 is the recoverable amount. This recoverable amount we will compare with the carrying amount. What is the carrying amount? 5,25,000. So is the carrying amount higher? Yes, carrying amount is higher than the recoverable amount. So carrying amount of machine A as on 31st of March of 2018 is 5,25,000, right? So impairment loss will be 525 minus 489,770. It comes to 35,230. 35,230 is the impairment loss on machine A. So carrying amount of machine A after impairment loss would be how much? 525 is the carrying amount minus 35,230. The revised carrying amount would be 4,89,770. 489,770 is the revised carrying amount of the machine after impairment loss. Now moving ahead, when we have to test impairment for the CGU, what will we do? We will take the carrying amount of machine A, we will take the carrying amount of machine B, we will take the goodwill carrying amount, we will take the inventory carrying amount, and all of those put together, we will compare that with the recoverable amount of the CGU, right? And once we get to that, we will see whether there is any impairment, or not. Now let us look at the impairment loss on the CGU. Now the CGU has machine A, machine B, inventory and goodwill. So machine A, machine B, inventory and goodwill. Now see, if one thing that you need to keep in mind is, if inventory is valued as per Ind AS 2, they would have valued it at net realizable value, and also as we have discussed earlier, Ind AS 36 does not apply on inventories which are dealt by Ind AS 2, right? So there will be no impairment as far as inventory is concerned, but to arrive at the carrying amount of the CGU, we have included inventory value, right? So what is the carrying amount? Carrying amount of machine A after impairment is 4,89,770. Okay. Then carrying amount of machine B we have calculated above, and that was 3,50,000. Inventory is at 2 lakhs given in the question, and 1,50,000 is for goodwill. Okay. So these are the respective carrying amounts. So what is the carrying amount of CGU? The carrying amount of the CGU is 11,89,770. Now this carrying amount of CGU of 11,89,770 will be compared with the recoverable amount of CGU. So recoverable amount of CGU is how much? 10 lakhs, right? It is 10 lakhs. So is there an impairment loss? Yes, because the carrying amount is greater than the recoverable amount. So there is an impairment loss of 11,89,770 minus 10 lakhs. You get 1,89,770. Okay. Now, how should we allocate this impairment loss? Which asset should bear this impairment loss? First principle, this impairment loss will be borne by goodwill. So you have to write off goodwill fully. So impairment loss here will be fully written off to the extent of 1,50,000. Entire 1,50,000 of goodwill will have to be written off. Now, after goodwill has been written off to the extent of 1,50,000, how much is the balance? The balance is 189,770 minus 1,50,000, 39,770. Now, think of it. Can I further impair machine A? Because machine A is right now at 4,89,770. Can I also charge further impairment loss on machine A? Now, please remember, after charging impairment, individual asset should not be shown below their recoverable amount. That is what we have understood, right? So machine A has a recoverable amount of 4,89,770. So if it has a recoverable amount of 4,89,770, I cannot provide for any further impairment loss. It is already impaired. So further impairment loss will be 0. Further impairment loss will be 0. Then what do? Whatever is the balance left, 39,770 will be borne totally by machine B. Again, we cannot impair inventory because inventory is anyways being carried at net realizable value. So we will not write down inventory below 2 lakhs anyways. So whatever is the balance loss of 39,770 will be borne by machine B. Inventory will not bear anything. So after charging this impairment, the total impairment loss, if you see for the CGU, is 1,89,770 and revised carrying amount will be 489,770 for machine A, 350 minus 39,770 for machine B. Inventory will be at 2 lakhs and goodwill will be at 0, and the carrying amount of the CGU will be 10 lakhs. Right. Now, based on these revised carrying amount, we will calculate the depreciation for 18-19 and we will compare that with the recoverable amount and see what is to be done. So, we will calculate depreciation for machine A and machine B, and then we will add the carrying amount of inventory to this. Okay. So, carrying amount as on 31st of March of 18, we had calculated for machine A to be 489,770 and for machine B to be 3,10,230. What is the residual value? Residual value will be at 50,000. Residual value is at 50,000 and for machine B residual value is 0. What is the remaining life? Remaining useful life, if you see, for machine A we have already charged off depreciation for 5 years, remaining useful life is 5, and for machine B we have charged depreciation for 3 years, remaining life is 7. Okay. So, I just need to add the depreciable amount also. Depreciable amount will be 489,770 minus 50,000 and 3,10,230 minus 0. What is the depreciation? Depreciation is 439,770 divided by 5, which is 87,954, and 3,10,230 divided by 7, which is 44,318. What is the carrying amount? 31st of March of 19 will be 489,770 minus 87,954 and 3,10,230 minus 44,318 for machine A and machine B respectively. Then what is the carrying amount of CGU? You have to take machine A, you have to take machine B, and you have to take inventory. Goodwill will anyways be 0, right? So for machine A, 4,01,816, for machine B 265,911, inventory, assuming the same inventory is being carried out, we don't know whether it has been sold or not, and goodwill is 0. Okay. So what is the total? For CGU will be 4,01,816 plus 265,911 plus 2 lakhs will give you 8,67,727 and 8,67,727. This we have to compare with the recoverable amount of 11 lakhs. So definitely there is an indication that recoverable amount is greater than the carrying amount, and assuming that the other conditions of reversal of impairment are satisfied, that is there are indicators of reversal of impairment and the estimates of recoverable amount have changed, because of which we can reverse the impairment loss. Now how much can we reverse the impairment loss? Now if you see, what is the excess? 11 lakhs minus 867,727, excess comes to 2,32,272. Can we reverse this entire amount? We have to check what would have been the carrying amount of machine A and machine B had there been no impairment, and then we can bring back those assets to the maximum of that carrying amount. Beyond that we cannot take it further, right? So let us do that computation. Carrying amount of machine A and B considering no impairment. Okay. So for machine A and for machine B, right? Carrying amount before impairment loss as on 31st of March of 18. Now, what is the carrying amount for this machine? For machine A it was 5,25,000 and for machine B it was 3,50,000. These were the carrying amount before charging impairment loss. Okay, then less depreciation on original cost basis. What is the depreciation on original cost basis? For machine A, depreciation per year, if you see, here was 95,000 and for machine B it is 50,000. So, what is the carrying amount? Carrying amount without impairment is 525 minus 9,50,000, 430 and 3,50,000 minus 50, 3 lakhs. Okay. So, this is the carrying amount without impairment, 4,30,000 for machine A and 3 lakhs for machine B. Now, if you see the inventory is anyways not impaired. So, inventory carrying amount is 2 lakhs. Okay. Now, without impairment, this would have been the carrying amount 430, 3 lakhs and 2 lakhs. Now, the amount of impairment loss that you can reverse will be restricted to bring these respective assets to 430 and 3 lakhs. You cannot take them beyond this. So, carrying amount after impairment. What is the carrying amount after impairment? For machine A, it is 4,01,816 and for machine B, it is 2,65,911. So, only to the extent of this difference, you can write back the impairment loss. Beyond that, you cannot write back the impairment loss. Here anyways, there is no change, inventory is same. So, reversal of impairment loss will be to the extent of 430 minus 4,01,000, that is 28,184 for machine A and 34,088 for machine B. Inventory, this is anyways be 0. So, total reversal will be equal to 28,184 plus 34,088, that is 62,270, that is 62,272. Though the excess is 2,32,272, maximum reversal is possible only to the extent of 62,272 because after reversing the impairment loss, the carrying amount of the asset should not be more than the carrying amount which would have been had no impairment loss been provided. So, what did we do? We calculated the carrying amount without impairment, right? So, it is 4,30,000. If I am reversing an impairment loss, the carrying amount of this particular asset should not be greater than 4,30,000. So, after impairment, the carrying amount of this machine is 4,01,000. Carrying amount without impairment as on 31st of March 2019 would have been 4,30,000. So, maximum reversal that is possible is 28,184 for machine A and similarly 34,088 for machine B, right. So, this is the total impairment loss which can be reversed. Okay. Now, the other way to look at this is you can take total carrying amount of CGU considering no impairment, that will be 430 plus 3 lakhs plus 2 lakhs and considering impairment will be 4,01,000 plus 265 plus 2 lakhs. 265 plus 2 lakhs, you get 867,727. Reversal will be 930 minus 867 maximum. Okay, this is a maximum reversal. Now, if the question was like, if this was not 11 lakhs, for example, for argument's sake, this was not 11 lakhs, this was only 9 lakhs. Then 32,272 would have been the reversal. So, 32,272 would have been the reversal. This reversal would be allocated between machine A and machine B in the ratio of these carrying amount. Okay, so in that case, in second scenario, assuming recoverable amount is 9 lakhs, the excess is 32,272. So, reversal would have been 32,272 or multiplied by 41816 divided by 401,816 plus 265,911, that would have been 19,420 and balance reversal would have been allocated to machine B. Okay, this is a scenario if the recoverable amount was 9 lakhs, then maximum reversal would have been only 32,272. Okay, then once you got that, then your carrying amount would have been this plus this, 421 236 and this plus this 278 763. So 4,01,816 plus 19,420 and 265,911 plus 12,852 278 763. Inventory would be at 2 lakhs and the total would have been at 9 lakhs. Okay, this is the second scenario. This is the second scenario. The first scenario, as per the question, this is 11 lakhs, right? Had you taken entire reversal, then the carrying amount would have been much higher, which is not allowed. So in that case, we will do as per the workings that we have done below. Maximum reversal possible is to the extent of difference between carrying amount without impairment and carrying amount after impairment.